Team, your Ottawa mortgage experts, and I just wanted to do a really quick video regarding the upcoming mortgage rule changes taking effect on January the 1st. So we're getting a ton of phone calls, inquiries, emails, just wanting to know who it affects and what we can do about it. So first I wanted to let everybody know January 1st is the cutoff line or the cutoff date for the new stress test and the new mortgage rule changes. And who it's going to affect is anybody who's buying a home and wants to put more than 20% down payment. So if you're putting 20, 30, 40% down, this is going to affect you. If you're putting less than 20% down, so 5, 10, 15, you're paying CMHC, don't worry, does not affect you. You guys already did that stress test last year. So basically the new mortgage rule changes is going to put everybody on the same playing field. So everybody will have to qualify at the exact same rate. So if you're conventional, putting more than 20% down, currently you're being qualified at the contract rate. So if you call us up, we give you a pre-qualification at 2.99 for 5 years. This is what you're being qualified at. So assuming this is a $1,200 payment for the new mortgage or the new purchase price. Come January 1st, we have to act as if you're paying 4.99%. So even though you're paying $299, we have to act as if you're going to pay 4.99. So it's 2% over the contract rate or the Bank of Canada posted interest rate. And every financial institution is going to be a little bit different. That's why you have to call a mortgage broker just to find out whatever that magical rate is to help you get qualified for a home. But essentially, we have to act as if you're paying $1,500 instead of the $1,200. The second person is going to affect is anybody who is up for renewal and wants to change financial institutions. I want to be really clear. If you don't qualify to change financial institutions, you do not have to undergo the stress test to stay exactly where you are. You can just renew with your bank or your non-bank lender, whoever you're with, and there won't be a stress test that has to be undergone. It's only if you want the financial freedom to shop around product, to shop around strategy, contract, or interest rate. So if you don't qualify to move, just stay put. There's no stress, no worry. The third person it's going to affect is anybody who wants to borrow money back out of their house. That's called a refinance. So you've done a really good job. You've built a ton of equity in your home and you want to borrow that money back for college or consolidation, or maybe you want to do renovations on your home. That is going to affect you. You will not be able to borrow as much as you once did come January the 1st. So essentially, just to give you an idea, household income has to be between about $70,000 to $80,000 to qualify for about a $300,000 mortgage, which means you have to be making 20 to 25% more income to get the exact same mortgage amount that you have today. So if you have any questions, I also want to be clear that in order to get under the wire, the biggest question we have is, do I have to close my house or do I have to close everything before January 1st? No, you have to have an accepted offer to purchase. So you have to be in an agreement to purchase a house. You can close anytime after 2018. That's not an issue. Have an accepted offer. Number 2, have your switch transfer approved or your refinance approved before January 1st. You can close afterwards. That's not a problem. We only have 2 financial institutions that agreed to do pre-approvals, that if you didn't find the home of your dreams to buy before January 1st, they will honor pre-approvals. There are restrictions to that, so make sure you give us a call to understand what those restrictions are, and you will only be restricted to those 2 financial institutions. So as things change, or anybody else that may want to jump on board with the pre-approvals, we'll let you know. We'll keep you informed. 613-695-9250. Thanks.